What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. So in this video, we're going to talk about the S&P 500 index and the Nasdaq Index, along with talking about the second quarter GDP results that came out today, in addition to the initial claims that were filed last week. I'll also talk about the big tech earnings, so we'll go over the big four companies like Apple, Amazon, Facebook, and Google, and kind of break down what exactly they reported and how the stocks reacted to the news after hours, because there was a lot of volatility and a lot of action after the markets closed at 4 p.m. So we'll break it down exactly what happened for you guys and then do a technical analysis on the S&P 500 and the Nasdaq Index. As always, if you guys enjoy this video, please make sure to drop a like. And I also want to thank each and every one of you guys. We just crossed over 5,000 subscribers, so thank you so much. I really appreciate your guys' support. If you're new, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. So the first thing we're going to talk about is the second quarter GDP numbers, and this chart right here essentially goes over the historical GDP growth versus contraction. And in Q2 of 2020, so the second quarter of this year, the US economy contracted by a record 32.9%, which is the largest decline on record, but it was much better than the estimated 34.7%. But in my opinion, the estimate kind of takes away from the bigger picture, and like this is still a record drop. But one thing I will point out though is that looking at this chart, the last big drop we saw was in Q2 of 1921, when the economy essentially contracted by 28.6%. But it's also really challenging for us to compare apples to apples because things were really different back then, and the US GDP was also much less, I think close to $1 to $2 trillion compared to now, where it's 10 times of that size. So it becomes really challenging for us to kind of understand exactly the impact of this contraction and how we can better prepare for a recovery moving forward. So let me know in the comment section down below, because I would love to hear your guys' feedback. And the second thing we're going to talk about is the initial claims number, and they came in today as well at 8:30 a.m. Eastern, and they were higher for the second straight week. So coming in at 1.434 million people who filed for unemployment benefits last week versus the expected at 1.45 million, which represents that we beat expectations. But again, it takes away from the bigger picture that there are close to 1.434 million people still filing for unemployment claims, which is still much higher, and the continuing claims just rose over 17 million, up from 16.2 million people. So that's definitely something that we need to consider, and hopefully we can get this number down to well under a million people filing for unemployment claims every single week, because we haven't dipped below the 1 million mark since the beginning of this global pandemic. So hopefully things will get better as the economy reopens back up and there are hopes for getting a vaccine and people are going back into work and are getting employed and finding jobs moving forward. So now we're going to jump into the main event, which is going to be the big tech earnings. So talking first about Facebook, their revenue jumped over 11%. They reported a profit of $1.80 per share versus $1.39 that was expected, and revenue came in at $18.7 billion versus the $17.4 billion that was expected, so handsomely beating both EPS and revenue estimates. The stock jumped over 6% after hours, trading all the way as high as $249. So the next company we're going to talk about is going to be Google, and they beat their estimates as well, both for the top line revenues and the bottom line profit. EPS came in at $10.13 per share versus the $8.21 that was expected out of Google for the second quarter of 2020. The revenue came in at $38.3 billion versus the $37.37 billion that was expected by the analysts. For Google, the stock didn't quite move much, and it was only up close to about 1% after hours. So now talking about some of the giants, Amazon reporting staggering revenues in the second quarter of 2020 at around $88.91 billion versus the $81.56 billion that was expected. The EPS of $10.30 per share versus $1.46 that was expected. Let me repeat that. A $10.30 EPS reported versus $1.46 that was expected. Now, you guys know from my previous Amazon update, one of the things that I was really curious or particularly interested in knowing about was the online grocery business. And According to the report, in the second quarter, Amazon reported that their online grocery business tripled year over year and increased grocery delivery capacity by more than 160%. The stock essentially reflected exactly that, and it was up over 5% after hours. And a 5% jump for a stock like Amazon equates to about $160 per share, which is absolutely incredible. It was trading at over $3,200 after hours. So definitely very strong report and how they're positioned for a better future growth. Now talking last but not least about Apple, reporting a strong quarter as well. $2.58 in EPS versus $2.04 that was expected. Revenue came in at $59.69 billion versus $52.25 billion that was expected. They also announced that they're going to do a 4-to-1 stock split, and that essentially means for every 1 share that you own for Apple, you will basically get 4 shares at 1/4 the cost. Meaning if I own 1 share of Apple at $400 per share, I will now own 4 shares at $100 each. So the market value or the notional value doesn't really change much. It's just a way of adjusting the stock price with the shares outstanding. And that essentially goes into effect the last week of August. So around August 24th and August 31st, that's when the stock will be trading at a split adjusted price, and all the investors and people will once again have the opportunity to own Apple stock at close to about $100 per share. So another thing I want to mention quickly is that just after hours alone, after these companies reported their earnings, the market cap combined for these 4 companies went up close to about $200 billion from 4.9 trillion to over 5.1 trillion dollars. And this chart right here essentially shows you the market cap weighting for these 4 companies in the S&P 500 and the Nasdaq 100. And you'll notice how these 4 companies comprise or account for close to about 20% in the S&P 500 and well over 40% when it comes down to the Nasdaq 100. So if these companies are pushing up higher, that's obviously going to eventually push up the S&P 500 and the Nasdaq indices as well. So now we're going to jump over to the S&P 500 and the Nasdaq Index and break down some key support and resistance levels that we need to watch this week going into next week, and we'll look into where they traded after hours as well. Alright guys, so here we are inside my TradingView platform right now looking at the S&P 500 Index, and before we jump into the technical analysis, I want to quickly go over Amazon, Apple, Facebook, and Google and where they were trading after hours. The markets are still open after hours. So right now you can see that it's up just over 5%, trading all the way to 32.7, up $155 per share. And this right here is the big spike that you guys will notice after hours, right after the markets closed and they reported their earnings. Looking at Apple, ticker symbol AAPL, the same exact pattern. They're up a lot after hours, going up over 6%, trading all the way up to $407. And this right here are going to be the 2 candles that essentially jumped right at 4 p.m. Now looking into Facebook, ticker symbol FB, this right here is going to be the jump, very similar to Apple and Amazon, up over 6%, trading all the way as high as $248. And this right here is going to be the candle that spiked right after the markets closed. The only stock that didn't move quite as well as the others is going to be Google, which you can see that it was trading as high as 1586, but then it dropped all the way down to 1545, and right now it's up only close to 1%, trading at 1545. So now we're going to jump over to the S&P 500 and kind of break down the pattern on a daily level, and then jump into the 1 hour and the 5-minute chart to kind of map out the next support and resistance levels. So from my previous market updates, you have a really good understanding on what levels we are watching. The 3200 level I have mentioned consistently many times in my previous market updates that this level, in my opinion, should hold as a really strong support because we've seen a lot of buyers coming in right at the 3200 level, as seen as a really good dip buying opportunity for many people. As you guys can see, this right here was a doji candle, and that essentially means we touched all the way down to 3200. So the low for this candle is 3200, and then it pushed up higher, closing in on 3226. So there was a lot of bullish activity on that day. Similarly, you can see on July 17th, we touched as low as 3205 and then essentially got bought up and pushed the S&P 500 higher. The same exact thing happened today as well. So if we were to go over to the 1 hour chart, you guys will notice that this right here is where the markets opened July 30th at 9:30 a.m. Eastern. As soon as the markets opened, this big red candle, so the first hour we got a rejection at 3230, which we have seen previously acting as some type of rejection going back as far as July 27th. So we do get sold off, and the low for this candle was 3204, which was also the low for the day. And then you can see moving forward, we finally pushed up higher, breaking higher 3230 resistance and then closing in at 3246. Another interesting thing that I want to mention on the 5-minute chart though is that we touched that level twice. So we sold off all the way down to this level. So this right here was the candle touching 3204. We push up and then come back down to retest and revalidate that support, which the bulls did an incredible job of doing. And then we revalidate this support and then push up all the way, breaking out of 3230 and then closing in on 3246. What levels do we need to watch next? Well, 3230 in my opinion should now start acting as a support once again, because we have now finally broken above that level. So previous resistance can tend to become a new support if we were to come back down and retest this level. But moving forward, this right here is kind of like the resistance on the S&P 500, 3264. But one of the things I want to mention is that SPY after hours is also trading much higher because of the big tech earnings, right? So it's up close to about 80 basis points, trading all the way as high as $326. And SPX, which doesn't trade during market hours, it becomes really challenging for us to kind of understand exactly where it's going to open tomorrow and how it's going to trade throughout the day. So what I will do is I will essentially push up S&P about 80 basis points from its current levels. So right now you can see 3246 is where it's closed. If you were to go up 80 basis points, I'm guessing it's probably going to open somewhere around here based on SPY's current value, right? That's all it is. It's not a good representation on where the markets could potentially open, but just to give you guys a ballpark of where it could potentially open, just because SPY is trading higher after hours, I could potentially see the markets opening in right here at 3272. So right at this level is where the S&P could open, and if that were to happen, the next support I would be watching is 3265, which has previously acted as some type of resistance going back as far as July 29th. So that right there could potentially act as support, and it has done that, going back even further as well, so July 21st. The next resistance, or the next bear camp we need to break out of, is going to be 3279 to 3290 level, right? So that red rectangle you guys see is going to be the next resistance, because we have gone rejected there multiple times going back as far as July 23rd. So that is going to be the resistance we need to break out of. And to give you guys a ballpark, I'm expecting the S&P 500 to open right around here, and then the 3265 level is going to be the next support, and 3279 is going to be the next resistance, and we're probably just going to trade in between this range before we break out of this level or break down and come down to retest 3233 level. So now we're going to jump over to the Nasdaq Index, which is going to be ticker symbol IXIC. And this right here is going to be the Nasdaq, and I'll go ahead and remove some of these arrows and previous analysis to kind of give you guys an update and what levels we're watching moving forward. So right now we're looking at the 5-minute chart, and the low for the day was 10,412. And in my previous market analysis, I essentially mentioned that this level right here could potentially act as a really strong support, because we have been validated at that level going back as far as July 27th. So you can see that we bounced off of that level, and this was previously acting as a resistance. So if we were to extend this line, you can see that today as well, July 30th, right at 10 a.m., we were trading at 10,400 before bouncing off of this level and then essentially pushing up over 1.7%. The 10,570 to 10,600 level, which is what this red rectangle represents, was, in my opinion, seen as a really strong resistance, but the Nasdaq Index did a really good job breaking out of that level. Not quite. We still have a little bit of work to do to break above 10,600, and the QQQ ETF, similar to SPY, was trading much higher after hours. You can see that it's up over 1.7%. So to go back to IXIC, if I were to break down 1.7%, and to give you guys a ballpark on where it could potentially open, we're looking at a jump of close to about 178 points or 179 points. So we can potentially open here tomorrow, and then that would result in a 1.7% gap up. And the next kind of support that I would personally be watching for Nasdaq is going to be right around this level, which is going to be 10,700, because that has previously acted as some type of resistance and some type of support going back as far as July 13th, right? So we essentially pulled back down to this level and then pushed up to the next resistance at 10,840, which is where our bear cam for Nasdaq sits, and that's where our double top resistance is going to be, right? So we have gotten rejected there multiple times. So moving forward, that's right there, kind of like the breakdown for both the S&P and the Nasdaq. We potentially could gap up higher based on tech earnings because both SPY and QQQ are trading higher after hours. That being said, I wanted to give you guys a ballpark on where the markets could potentially open tomorrow, and the next support we're going to be watching for Nasdaq is at 10,730 level, and the next resistance is going to be 10,840, and all of our supports that we marked from the previous market updates have been validated, so we're going to keep a close eye on those as well. I hope you guys enjoyed this video, and if you did, please make sure to drop a like. I really appreciate you guys' support. As always, subscribe and hit that notification bell so you don't miss out on any future market. Also, make sure that you subscribe and hit that notification bell so you don't miss out on any future market updates and videos related to investing and technical breakdowns. As always, happy investing, and I will see you guys in the next video. Wow.